summer, we still have each other on our minds. It's just a little awkward now, awkward now, awkward now, awkward now, awkward now, awkward now.
Testing. Oh, there we go. Just talking to myself. Thanks, Cutter. Appreciate it. I don't know how my microphone got muted, but... Well, anyway, the normal spiel, you guys have probably heard it a couple times. Make sure to sign up for the daily Outlook newsletter, and then make sure to sign up for the free 3-day trial in the live trade room so you can check us out, see how we approach the market, see how we trade, even when it is dead slow like we had this morning. Definitely still some opportunities. So now that my microphone is fixed, but anyway, let's take a look at the markets here. So let's drop that out of the way. So the euro is first up. The euro has continued to the downside, still driving lower. We have a good amount of bear pressure coming in, pretty obviously. I don't think that really requires a whole lot of saying there. Looking for the sellers to want to find some area of support that sticks, right? We've been finding a lot of areas of support on the way down, and none of them have really hung around for very long. It will bounce off of it, pause for a little while, and then keep crashing lower. It's the same thing that happened here at 17,205. Had a beautiful bounce off of there, pause there for a little while, and now we're crashing lower again. We haven't really found any level that wants to stick. And I think that really kind of backs up the extreme amount of bearishness that's been coming in on the euro. Looking for that continuation to keep pushing down. We have no other reason to do anything else other than sell. Sell pullbacks, sell corrections. Aggressive sellers will just sell everything. It just kind of depends on how you want to approach it. But right now, the way that I'm looking at it is that I need to be selling at as good of a price as possible. And that means corrective phases. We've been talking about wanting to sell corrective phases back here, and we've been getting plenty of them to work with. Now it's just a matter of which one we get next. Very good amount of bearish continuation of the downside, creating levels of resistance at 17,980 and minor resistance at 18,450, just to kind of see what happens there. We never got that pull into that zone of resistance up here, so I'm going to get rid of that. We're kind of done and gone. We had the correction up, it just didn't go far enough. So 19,035 is off the table in my eyes. Really, I mean, we're creating a little bit of a wedge. We're not seeing the sellers follow through to the bottom of the channel anymore, like we were back here, right? Nice skipping off the bottom of the channel. Now we're missing it. We're missing it. And we're missing it even more and more every time they try to make an attempt at the lows. And that's giving us a clue that sellers are probably running out of steam. I don't think that's much of a surprise considering it's been nonstop going down for, well, the past month and a half, 2 months now. So with that amount of bearishness coming into play, it's reasonable to assume that the market will eventually start transitioning into a range. And that range looks like it may have already started. A range high up here and a range low, we don't know yet. But the range highs do look like they're beginning to establish around that 18,500 area. Range lows, we need a little more info until we get that clue. But once we start transitioning into a range, then we're looking to full on just sell high, buy low, stay out of the middle. I don't think we're there yet. So overall, what I'm looking for is a little bit of a bounce, a corrective phase up that we can sell into to push the market back down. The earliest that begins is a resistance phase right around 17,540. That's the zone of interest for sellers to try to push back a bit on a corrective phase up. That said, though, I wouldn't mind seeing some deeper corrections now that we are seeing them coming in a bit more frequently. I would love to see a pull back all the way to 17,980, which would be, well, I would be pretty happy with 17,980. So we'll see if it can get there, but right now the earliest at which there will be selling resistance is at 17,540. If we can get a little bit of a move up to 980, it would be all the better. Can I get evaluation on ENGIE and Gazprom? NG and Gazprom. I'm assuming those are cryptos. I'll take a look at them for you, yeah. Let's make our way through the futures markets, then we'll jump on over to those. And yeah, I'll definitely add those to the list for you. Over on gold, gold did, compared to the euro, actually have a push up into resistance. This resistance is at 1296.4. Oh, no, they're not? Well, whatever they are, let me know, and then I'll definitely evaluate them for you. It'll obviously be a dry evaluation because I'm not sure what they are, but I'll take a look. Anyway, we have a drop off of 1296.4, nice resistance pushing off of that area, and a beautiful drop to the downside. Really, I think the overall location that we're in right now, it's choppy. I mean, the amount of back and forth that we're seeing right now on gold is brutal. We're not getting any follow through. The lows are failing breakouts. The highs aren't even breaking out. When they do, they fail. We're just chopped, and right now I think we're obviously developing a range of some sort. It's just a matter of where that range begins to kind of set in. The lows of the range could be as tight as right there. You know, I mean, visually speaking, it does fit. We've got support, 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 failed breakout into support maybe if it retests. If you go a little bit on the highs, we also have potential range on the highs too. So everything is kind of lining up for that transition into the range phase. We've already had the rejection off of resistance, so now it's just a matter of, you know, what fits the best, I think is kind of the big clue here in terms of where we're going to find that range. And that range, I think I like it here a little more. And let's extend that forward a bit. We'll add a month to it. There we go. I mean, I can't argue with how well that holds. You know, it's got a beautiful hold inside of there. The lows of the range are holding, the highs of the range are holding, and this seems to be the transitional point. Now, we are coming off the backs of a major failure on the highs, so likely this is going to make an attempt at the bottom, and the area of support that I'm looking for on the bottom is anywhere between 83.7 or the bigger one at 81.1. Those are the two big areas that I'm keeping an eye on as both profit-taking zones as well as, now that we're transitioning into a range, potentially finding some opportunities to go against that bear trend and find some buying opportunities down there at 81.1 or 83.7. Right now, I would prefer to see 81.1. I think it would be better, but the sell side's still dominant, and we're looking for continuation to the downside at the moment as long as we're near these highs of the range. Looking good. It's just a matter of when they want to continue. Over on crude. Man, crude oil. I don't know how many of you actually trade crude oil, but crude oil today, I felt like I would have more fun peeling paint off a wall. Today's price action on crude oil was abysmal, and that's being kind. Very, very weak price action today, and certainly nothing that I really found any opportunities on. We were looking for continuation to the downside. It didn't happen until we started hitting the inventories, and then from there, I'm not really going to trade through the inventories anyway. But beautiful bear drop to the downside. We shattered through a lot of levels of support. Those are all out of the way. The next level of support that we have to work with, which actually tested and held. Let me get a little closer here. That's at 71.60. Now it is testing. It hasn't broken technically with the close. I mean, we'll know in 45 minutes whether or not that broke. But the next level below that, 71.45, and the next support underneath that is at 70.92. So there's a lot of levels of support underneath the market that's really are holding up pretty well, but notice they are sliding through quite a bit. We're getting a little bit of slide through before they bounce back. So all of these areas, you kind of got to look at them more as a zone, right? Look at them and then look kind of historically. It seems like they like trapping swing lows right now. So you have a level of support, next swing low, that's kind of your zone of interest inside of there. Same thing here, right? Next level of support, next swing low, that's kind of our zone of interest here. So from 70.92, that's the next area if it does want to push down. Wedge top has held beautifully. We had the resistance off of 72.88. I don't think we could have nailed that one any better. And overall, now we're just kind of grinding lower. Primary objective area now on the downside, if this does want to keep going lower, is going to be a trap play off of these lows at 70.34. And even then, knowing that they are sliding through the bottom, I'm going to offset that by 10 cents just to give us a little bit of a buffer. So 70.24 would be that trap area low to push the market back up, or at least attempt to. Try to find some buyers to shove the market back from there. Right now, we're in a bear trend. We're coming off of the highs in the short term. The long term is still bullish. You don't want to forget about that long-term trend. The short term may look really heavy, but that might just be a corrective phase down and an overall strong bull move to the upside. So I am looking to short at the moment in the intraday move, looking to keep this sell pressure coming down until we can get down to 70.92 or preferably 70.24, and then look for some bouncing back up. New level of resistance off of the highs of that monstrous failure up there at 72.57. But aside from that, everything else is pretty straightforward. The tighter wedge low, not really feeling that one anymore. But aside from that, everything else is the same. So looking for support at 70.24 on a dip lower to find some buying pressure off of. And then we've got the S&P. Now the S&P is, I mean, it's had some pretty good movement today with some nice bear dropping, but for the most part, you know, the grand scheme of things on the 4-hour chart, we haven't really gone anywhere. We're just kind of stuck in the middle. We keep hitting the highs, failing, coming down, hitting the lows, failing, and we just keep kind of bumping around. I'm having a hard time getting anything going here. So right now, we're nearing the lows. We're not there yet. So because of that, I'm still on the sell side just slightly, looking for continuation to the downside to see if they can complete that test of 2,700, maybe a little bit lower to better support at 97.25. Once we come off of that, then we're looking for buying pressure to come back up and push the market further. If that does fail, which keep in mind, I mean, we are still off of the highs by quite a bit that were made back in January. We've slid off a really long ways. That high was back up towards 2,900. So the fact that we're only floating around 2,700, this is by no means a reason for me to go long at 2,700, 26.97 quarter and just look for, you know, a monstrous rip to the upside that lasts for the rest of the year. It could be. That could be the low, but chances are pretty slim. So long-term holds, maybe. But medium-term to short-term, definitely. That area at around 2,700, give or take a point or two. Everything else looks pretty good. New level of resistance off the highs at 38.5. Seeing more continuation to the downside. Again, I am leaning on the sell side just a little bit. Not by much. If I were to put it in percentage, it'd be like 55% to 45, right? Pretty low. But looking for a secondary push to the downside to test 2,700, 26.97 quarter, and then start bouncing back up. We'll have to wait and see what they want to do. So that takes care of the future side of things. Let me take a look at those stocks for you really quick here. Let me get... I think I remember you asking me about those before, and I had to use TradingView because I couldn't get them to load otherwise. Let me double check here. GAZ Prom. All? GAZP. Okay. Yeah. Oh, they were different ones? Okay, but they were still like out of the US country ones, if I remember correctly. Either way, on Gazprom, man, this could look a lot better. I do like the overall consistent bull trend to the upside, all things considered, but if we zoom out a little bit, that paints a slightly bigger picture. Please look at it in USD. SS Futures. This one's OTC US. Is that the same thing? $5. Does that sound about right? 471. It's not live data. It is slightly delayed, but yes. Okay. Thank you. So, I mean, the way that this looks right now is really, really range bound. There's a lot of issues in the overall movement. Every attempt at the highs, every attempt at the lows so far has failed or trapped. If we look back, that high was a trap. If we look back, that low was a trap. So technically, if we go to the next one, that one's probably going to be a trap. So the next area of interest for me that I'd be looking for is a trap, right? Looking for a trap that goes, well, preferably I'd rather go with the trend, but there will be a trap low potential at $3.78, and there'll be trap potential at the highs, oops, over here, which is going to be at $5.35. The overall trend is definitely bearish, right? They had a pretty strong fall from grace, if you will, off of the highs there, put in a high of almost 32 before collapsing all the way down. And with that bearish pressure to the downside, we're dealing with a little bit of a wedge. So the wedge right now is the kind of the thing in the way, I guess is the best way to put it, for the sellers to really kick this thing off. So right now, as long as this wedge low is in the way, it's going to have a hard time. But if that can start breaking, then you're looking for the next area of interest at $3.78. Now, this is obviously a bear trend. So I prefer on bear trends to go with the trend. So what I would rather see, if I can get this level to anchor right, what I would rather see is something that is a trap on the highs, because then we're going along with the trend for some possible shorts. So an area that looks really nice right now would be a trap above the highs at 535 and a little bit further, right? We have a rising resistance above us, and this is kind of creating a zone, right, all inside of here. Anywhere inside of there is going to be an area of interest for sellers to push down. If you're a buyer, that would be a profit-taking zone as an example. So I think right now it's just smack in the middle of the range. There's not really much that I would want to do here until it gets out of this. Now, you know, maybe on a faster time frame it'll give you something a little bit more to look at, but I mean, the faster, zooming in a little bit, this looks like it's probably traded in multiple countries, obviously. So there's going to be a lot of gaps all over the place. I'm just not really pumped about it where it is right now. I'd rather see a rise up to 535 for shorts or a dip low to 378. Maybe a buffer a little bit on the lows for a buy to push the market back up. Otherwise, it just doesn't look that good. At least where it is now. I mean, kind of looking inside of here, you could argue a level of support or resistance that is cutting through here. You have resistance, got support, resistance, kind of support and resistance inside of there, and we're back again. So maybe able to find some intraday plays off of this 471, but aside from that, not really impressed. Excuse me. I think I muted the microphone in time. All right. So that's kind of where it stands right now on Gazprom. It's just, it's stuck in the middle. I need a better price. ENGI. NG. Stock on Euro next. Does this one look right? $4.42 roughly. I want to make sure I'm looking at the right one before we go too in deep. In depth, rather, if I can speak. Yep, okay, perfect. So this is another one of those situations that has a very well-established downtrend. The nice thing about this is it's a little bit closer to the highs. And if we zoom in, we can see that this one has some gapping, but not as much. That makes it a little bit more consistent. That's kind of nice. Plus, the price point of being $14 makes it a little bit nicer, too. So there's not as much you know, back and forth that you would have on really cheap stocks. But the one thing that stands out to me is simply the fact that when they came back up to the highs, right, they missed it. And that's a really, really big clue. The fact that they missed that breakout of the major swing high, and then if we look at the swing lows across here, it held as support. Something's up, right? Not only was the support here, but it was resistance back there, support there. We had a miss here. Where are the sellers? Whenever we miss a high like that and we see some big selling volume coming in, the market should break through the lows. That's the anticipation, is that it continues down, breaks through the lows, and keeps on going with the bear trend. We're not seeing that. We're actually seeing support coming in at the bottom. So that's a little bit of an issue. That makes me kind of scratch my head thinking something might be up for a longer term kind of bull play at the moment. We had a really, really sharp dip down, and now it's starting to turn into a V bottom. If this starts cracking above these highs, this could start really running away. It just depends on how the market kind of wants to play it. But that 1234 area, that's no joke. I would not want to mess with that 1234. And the fact that they missed these highs over here at 1520, again, you know, the fact that they missed it and then failed the breakdown and are coming back up could be a level of resistance up there. But now there are probably a lot of sellers that are looking at this thinking, oh, crap, I don't want that. You know, I'm going to wait for the next one. And they're going to be looking more up towards 1675. So as it stands right now, I'm not convinced to the downside. This is obviously a very well-established bear trend, and the best the buyers are probably going to be able to do is go into a range, right? We have to be realistic here. But that said, I mean, something's up. I'm not convinced of the sell side right now. I think if I were going to be short, I would rather be shorting up towards the 1675 area instead to try to push the market back down again, giving it some room for a bull breakout. This is one of those types of locations, I guess, that you could be even looking for somewhat of a measured move, right? You've got that A to B. Actually, there's a tool for that, isn't there? What's it under? Is it under this? Yeah, ABCD. So we have our A point up to B right there. We have the C point down here, and then D point should be roughly about the same size, and guess where that puts price, right? If you're looking at the 618, if you like those fib numbers, closest I can get is 616, but that puts it right at that $17 mark. So I think right now everything is kind of hidden bullish, if you will. If it can start breaking above the highs of 1520, it wouldn't be a surprise to see it rally all the way up towards that $17 mark. From there, I would start getting really nervous. That's the zone where I would consider personally, you know, thinking, well, this might start turning around a little bit. So that's kind of the thing that I'm looking at here. It seems like something's up with this one, with NG, and it looks like it might want to catch a bull rally to the upside. And if it starts breaking above 1520s, it wouldn't be a surprise to see it rally up towards 17. Once it starts getting into the 1670s, that's where I would start getting a little bit nervous. Maybe, you know, partial profit-taking area, easing off the gas pedal a little bit, something like that. Thing is, these companies are working on huge projects, and in upcoming years, profits calculations can be very big. Yeah, for sure. Especially the other one. I mean, it's $3, right? So if it goes to zero, you lose $3 a share. Doesn't cost that much to go in. It'd be something that, you know, if it triples or quadruples or goes something crazy like that, it's not that hard with that cheap of a stock to, you know, throw in $1,000, throw in a couple $1,000s, and just see what happens. If it loses, then you're only out a couple grand. But if it works, you could quadruple that. You know, things like that. Those are kind of the ones that you kind of swing for the fences, assuming that it's probably not going to work. But if it does, the potential is there. So it's risk capital only, in my opinion, if that's a longer-term play that you're looking at. Again, I'm not a financial advisor. I can't tell you what to do with your money. But just thinking out loud, that would be more kind of the mindset, I think. It's a political project, so I'm looking for a good entry level. Yeah, for sure. So, you know, if that's the case, there's obviously support at 1234. And if it breaks above 1520, that could be an area of, you know, breakout pullback. Could be. I mean, unless it just goes flying higher and goes straight up to 17, which could be the case too. But, you know, it's, yeah, exactly. Small portion each month, thinking like DCA, dollar cost averaging in. Don't buy a cup of coffee. That's one share of that $3 one, you know. Use it on Robinhood. It's free. You don't, there's no commission, so you can buy one at a time. It's relatively straightforward in that sense. But overall, it doesn't look half bad. The other one, not so convinced on the bull side, but NG, it definitely feels like something's up here. So hopefully that helps. Taking a look at some of the other stocks that kind of stood out today. Today was a little bit of a wreck, if I'm honest, on the stock side of things. It looked like it was going to be such a really strong day. And then the open hit and everything went to crap. You know, I was watching Target, I was watching Micron, I was watching Cara, C-A-R-A, watching Red Robin, all these big names that had beautiful pre-market movement. Then the open hit and it just went bleh. Just kind of crapped out, nothing going on. We can look at our normal offenders here. If we take a look at Twitter. Twitter is seeing some more bullish continuation, trying to get that bull rally back up again as anticipated, finding resistance at 34. If we can start breaking above this 34 area, we do have a shot to get up to 37. But for right now, just kind of hanging out, really. I mean, it's not moving that much, which I think is kind of the big hindrance here. We're just stuck inside of this. So we're going to need to break up or down, one of the two, to get something going. Thank you for the analysis. Yeah, no problem. Definitely. So Twitter's in a little bit of limbo right now, trying to get the bull train going, but kind of garbage right now. Boeing had that huge gap to the upside above that 350 mark. We were looking for profit objectives at 350. It gapped and ran all the way up to 365. Beautiful, beautiful momentum play to the upside. Now the last objective is pushing above 370. We've been talking about this longing area down at 320s, and then again back at 332s, 333s, and now we're finally getting that follow through to the upside, up a good 30 some odd dollars from that area. I can't complain, but I would like to see this follow through to push the new all-time highs above 370s. Would look, well, 372s would look really nice. But looking good there. Did have a new IPO that launched today, EVOP. EVOP, obviously, on the daily chart looks absolutely abysmal because, well, it's only had 1 day to trade. But if we look at the faster time frame here, something like a 5-minute chart, we can kind of get an idea as to how this worked out. There's 8.1 million shares traded today and just flatlined. Opened up, it was priced between 14 and 16, opened up at around 20, and went flying lower. Tried getting a bold pop to the upside above 1964 was the area of interest, and just could not get it up to a new high before failing back down, and now it's pretty much flatlined. There is one more IPO that's supposed to launch today, AMBO, that's Alpha Mike Bravo Oscar. Haven't seen it yet. My charts aren't moving, so I don't think it's open yet. I'm not sure what's going on there, but maybe it'll open up a little bit later. Maybe it got delayed. I don't know. But this was the IPO potential play for today. It didn't do anything, so there's not really much that we could have done, but oh well, c'est la vie, right? Nothing, not everything can be as nice as PS like we had before. So it's just, you know, those IPO plays. I love getting a good IPO play if we can get one going, but today was just not the day for it, it seems. Not that great of movement. And really, that was kind of seen across the board. You know, looking at things like Micron and some of the other ones, just it opened up and just flatlined across the board. Really kind of gross price action. The only thing that really had some good movement was more on the future side of things when you're looking at things like the Nasdaq, etc. That had some really good play to it. But aside from that, that's really about it. Today was kind of a slow one. I think a lot of that has to do with the fact that we have the holiday around the corner, you know, Memorial Day on Monday. I think everyone's kind of taking it easy. I know my parents are out camping, and I'm probably going to be joining them this weekend. So it's, you know, I think everybody's just kind of ducking out of the office right now. Got to play it safe this week, that's for sure. One way or another, though, that'll do it for the overall outlook. In terms of the news for tomorrow, let's take a look at the news for tomorrow. I don't know where my news thing went. I thought I had it open, but I guess not. So looking at the news for tomorrow, obviously a little bit later today in about a half hour, we have the FOMC meeting minutes. That is a big deal. That will definitely be moving the markets around, and probably why today was a little bit funky in the overall move side of things. But FOMC in about a half hour, do not forget about that if you're going to keep trading. It can be a little bit dangerous. Going to tomorrow at 2 o'clock in the morning out of Germany, we have the GDP for quarter1 forecasted at 0.3%. Bank of England Governor Carney speaking at 4 o'clock out of the UK. At 4:30 out of the UK, they have the retail sales for April forecasted at 0.8%. If we look at 7:30, we have some Eurozone news with the ECB publishing the account of monetary policy meetings. That will probably be, you know, it says 7:30, but I would kind of put that with like a 10-15 minute buffer before and after that. At 10 o'clock tomorrow, we have the existing home sales for April forecasted at 5.56 million. And then tentatively throughout the day out of the UK, Governor Carney will be speaking again. So plenty of news going on tomorrow. It's just a matter of, what the market wants to do with the FOMC a little bit later today will probably be a good forecast for tomorrow, especially now that we're going in towards the weekend, not too far away now for a holiday weekend. So that's definitely something to keep in mind. But that's going to do it for today. As always, if I miss any of your questions or if you have any questions, feel free to send them to me, jbrink@slingshotfutures.com. Enjoy the rest of the day. Hopefully you had a great trading morning. Hopefully you have a good trading afternoon and a good trading day tomorrow. And like we always say, it doesn't matter what market you're trading. Always make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll talk to y'all later.